A 10% dividend yielding stock, should I buy it? Maybe should you buy it? That's what I want to do in this video, talk about this stock, walk you through my thought process, and I'd love to hear your thoughts too. I want to turn this into just a general discussion. So at any point, pause the video, leave a comment down below, let me know your thoughts, and we can see what happens, because maybe I have some blind spots, maybe there's something I'm not considering and I should. Maybe I say something to you that you weren't considering. But like I said, we'll just talk things through, and if you decide to buy, great. If I decide to buy, who knows? At the end of the day though, we got to make our own decisions. So let's set up a little context here, and then I'll get more into my thoughts. So if you follow the news, and I'm sure you've seen of these horrific fires out in Maui, and from this headline here, why Hawaii is scrutinizing Hawaiian Electric in the Maui fire. The utility company's share prices tumbled after lawsuits were filed seeking to hold it accountable for the blaze. So yes, the Maui wildfires were crazy, and now Hawaiian Electric, which is a publicly traded company, is under a lot of scrutiny, and they're in the news. And if you follow the news, then like I said, I'm sure you've seen it, but I did want to drop off a little background context just in case. And with all this news and with all this uncertainty, that has caused the stock to go down quite a bit, which makes for a very risky but interesting situation, because the stock has been crushed so much. It has pushed that dividend yield up to 10%. And then even if you don't really care about dividends, even from a swing trading perspective, there's an interesting dynamic here to it. But really, in my mind, the question becomes, well, do we have any other sort of former situations where something like this happened? Obviously not in an exact correlation, but broadly speaking. And yeah, we do. Now, depending how long you've been in the markets, then if you've been around for several years, then you probably remember this. PG&E shares drop again on growing concerns about California wildfire liability. So yes, we do have a relatively recent example of a wildfire and then the electric company getting in trouble. And again, is it apples to apples? Not quite, but I don't think it's some sort of bizarre comparison either. But in my mind, well, what happened last time a utility company started to get blamed for the fires and all that? And how did that all turn out? So let's take a look, and I want to look at ticker symbol PCG, because that is the utility company out in California that went through this big, similar thing with the wildfires. So you can see the stock had been trading up here in, we'll call it the $60, $70 range, and then things got rough. And what I'm very curious about though is this steep drop here, because as we'll see when we look at the Hawaiian Electric chart, you'll see something very similar. But what's got me curious right now is there is this drop all the way down here, and then this right here. And this period right here lasted for a few weeks. So there was a few weeks that went by, and it was looking like, okay, is this some sort of bottom? And that's right now where I'm at with ticker symbol HE, which is Hawaiian Electric. I'm wondering, are we in this phase of things right now, which PCG showed, yeah, it looked like it was maybe over because you had this big drop, but then look what followed. Another big drop, which took this thing all the way down to the lows right there, which were essentially right back here around $7, $8. But what comes after that, and this is what I mean from those of you that are potentially swing traders, is after it got down that range, a very nice bounce all the way up to there, which is essentially right around the $24 mark. So I mean, you're looking at hundreds of percents of a bounce there over the course of a few months as the price went from right around $7 to up around $24 per share. It did roll back over. But point here being is, from a swing trading perspective, that could have been, I mean, that's a greater than 100% move that happened in that part of the chart. The other thing to consider here with PCG, which is what I have to remind myself of, because I like those dividends, I like that passive income, is that PCG no longer does pay a dividend, at least at the recording of this video, which is in August of 2023. So my point here is that if this is strictly, and this is more so me talking to myself, but if this is strictly a dividend, I want that 10% dividend, then I've got to be very, very realistic that the company might just say, no, we can't afford to pay that dividend anymore. We got plenty of other legal matters and stuff that we got to pay for. So that is a very high risk type situation. But I mean, if they are able to weather the storm, and that's what makes this a high risk situation. But if they are able to, manage the storm here, and they can keep paying that dividend, like I said, 10% dividend yield, very, very nice, especially if the stock starts to get the bounce back in the upwards direction. So you could be looking at a 10% yield plus some very, very nice returns on growth if you get the bounce like you saw there with PCG. But At the same time, it's kind of a balancing act because let's say that for myself, and again, I'm just thinking out loud, let's say that I don't get the dividend anymore because I cut it. But if I can still get some sort of bounce like we just saw there with PCG, then sure, it's disappointing I'm not getting that yield. But I mean, I'll take the potential, very, very big gains back to the upside if that were to happen. So that's the balancing act. Now, obviously, best case would be get dividend yield and the bounce back upwards. But even if you just get the bounce back upwards, I don't think that's terrible either. But like I said, that's, the one dynamic that I'm wondering, where are we at within that phase? But let's take a look at the Hawaiian Electric chart. So here we are looking at Hawaiian Electric, and just like we saw with PCG, a very, very, very steep drop downwards. And now it hasn't even really started to go sideways. But my point here is that we have already had a couple of these periods where it looks like maybe sideways action is happening to then just have it drop even further lower. And we have that again, once again. Price bounce upwards. Now it's starting to go sideways. So that'll be the big question mark moving forward. Where do you stand with this? Do you think that another rollback is coming? Do you think that this is going to be the sideways action that then creates a good solid bounce? Like I said, these are the questions that I'm knocking around. And, in my mind, and maybe it's just a psychological thing, if I could get some shares down below $10, and this may very well be the confirmation bias with PCG and seeing how that one went down below $10 before getting that bounce back up to the $20 range. So that could very well be, what's causing that, price range to just stick out in my mind. But I mean, even if it, the price can bounce back up to, let's just say half of this range, which puts it at $25. I mean, even if you get shares at, $12.50, that's still a 100% move right there. If it goes down to, the $10 mark, now you're looking at even bigger gains than that. So like I said, but I got to keep reiterating this is a high risk play because maybe Hawaiian Electric just goes bankrupt and this all goes away too. So I mean, by no means am I saying to YOLO into this or put your life savings or put your kids' college tuition, but if you have a portion of your portfolio that you like to take on a little bit more speculation with logic behind it, because we are applying some logic here. It's not like this is some bizarre company. No, this is a real company. It's a utility company. So it's not complete just a random dart throw, but you also have to acknowledge there is some risk behind it. So that's my thinking right now. Like I said, in my mind, there's just something about wanting it down below $10. But this is an ever thought process. And to be fair, for those of you that do leave comments below, maybe one of you changed my mind. So I'm not saying my requirement is that I am going to buy. I'm not saying I'm only going to buy it below $10. This is a very fluid situation. And why I wanted to get this out to you because, in all sincerity, because I do read comments, and I'll especially read comments on this one, I'm definitely open for blind spots in my logic. I'm open for other, reference points of perspective that can maybe lead me to, maybe I'm missing something right now that's like, no, Clay, did you not realize that there's like a 99% chance that they're going to go bankrupt? That could be very real too. So I'd encourage you to read through the comments and make sure that I haven't seen anything that implies like for sure bankruptcy. I've seen a lot of speculation out there. But like I said, that's the whole point of it at the comment section and hopefully a good little discussion. But that's the stock that I'm wondering. 10% yield, potential to get a very, very solid bounce because, this thing got hammered down in a hurry. So we'll see what happens with it. But, that's the one stock that I'm really thinking about right now here in, again, August of 2023 for perspective. So if you're watching this video a year from now, that'd be cool. You can go back and see what happened with ticker symbol HE. Did it recover? Did it go bankrupt? So that'd be another interesting perspective. But that's where I'm at right now. So again, please leave comments, thoughts down below. Would love to hear it. If you enjoy these types of videos where I'm opening it up for a group discussion, or I'm kind of walking you through some thought process between an investment or maybe just a swing trade, like I said, hit that like button, let me know down below, and I can try to do more of these videos in the future. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.